Good morning, everybody. Good morning, everybody, and happy Evergrande Liquidation Day. Today is Monday, January 29th, 2024, and the big news, of course, is Hong Kong court. We finally have something resembling closure to the Evergrande saga, something that started years ago. It's one of the first subjects I even started covering on this channel back in the infant days of Nobody Special Finance. The overbuilding in the Chinese housing market and how the three red lines policy was just going to crush these developers and all the empty cities, vacant buildings, tens of millions of unoccupied apartments, tens of millions of men and with no ladies to go around who have no hope of ever getting married. And so people were just piling into the housing market, buying anything and everything, not because it was a place to live, not because it was an investment, because it was their only hope of ever getting married and having children. And well, wouldn't you know it, that's a recipe for financial disaster. And Evergrande was the first to start showing the weakness. They defaulted on their bonds back in 2021. I mean, it was years ago that they actually defaulted on their bonds, their offshore dollar-denominated bonds. They've been dragging this out in court over and over again. And then yesterday in Hong Kong, they were finally ordered by a Hong Kong judge to liquidate, basically sell everything and pay what you can. So now the big question is, now what? And as it turns out, maybe not all that much because, well, Hong Kong court doesn't have a lot of sway in China. CCP is saying nothing. They're saying nothing about it. There's actually very little mention of Evergrande, no mention at all that I've been able to see in any Chinese news because, well, I guess they just don't plan on listening. 90% of Evergrande's assets are in mainland China. So these offshore bondholders who won in court and Evergrande was ordered to liquidate everything, I guess their only recourse is going to be to seize what little assets Evergrande has in other countries, assuming the court system, the legal system in those countries cooperate. Really, Evergrande is just humming along, doing whatever it is that company does. Can anybody even tell me what they do besides rip people off anymore? But at least this is now something resembling closure, at least for those offshore bondholders. There's still hundreds of thousands of people who have paid Evergrande for apartments that were never built. They have mortgages on those apartments that were never built. Are they going to pay those mortgages? Are those apartments ever going to get built? What happens to Chinese banks if they don't pay those mortgages? What happens to emerging markets and European banks if Chinese banks start to have trouble because of people not paying their mortgages? These are all questions left unanswered still today, this morning. But at the very least, we finally got closure on this silly liquidation thing that has just been extended and kicked down the road over and over again for years. But meanwhile, that's not stopping U.S. hedge funds from buying stock in Chinese companies hand over fist like they did last week. What? That's right. In China, where they basically say, okay, overseas investors, you're first in line to get ripped off. We are taking everything from you just to keep our stupid bubble alive. And meanwhile, U.S. hedge funds are just piling into Chinese stocks at a pace we have not seen since 2015, the second fastest pace on record. We've also got more trouble in the Middle East. Over the weekend, there was an attack on a U.S. base at the Jordanian-Syria border. On the Jordan side, 3 U.S. service members were killed in a suspected Iranian drone strike. And now the whole world is sitting there just wondering what happens next. There's a lot of pressure. There's a lot of cry havoc going on in the political world right now. Everybody's tempers are flaring. So oil prices initially reacted sharply higher last night on that news. They're actually down this morning. So that's the next question here is, do we get yet another escalation in the Middle East? We've got Bloomberg is saying the Federal Reserve may be basing monetary policy based on flawed jobs data. This just in, Bloomberg is only about 14 months lagging Nobody Special Finance. Isn't that interesting? We've been saying that since, November of 2022. I had Kirian Von Hest on the channel, a.k.a. Deso Games, and we were talking about the job postings. Was it Kirian or was that the interview with the Happy Hawaiian? That may have been the Happy Hawaiian interview. I did both right around the same time. Apologies to Kirian and Happy Hawaiian, two very intelligent guys. Both have been guests on the channel before. But we were talking in that interview about how the job postings were just fake, multiple job postings, the same job posted in every city, and it's making it look like there are more job openings than there really are. And, well, 14 months later, Bloomberg is finally covering that story. Isn't that nice? We've got Amazon has announced that they are terminating their merger with iRobot, the maker of the little robotic Roomba vacuums, the ones that wander around the room like Joe Biden trying to get off the stage. Those things, well, the European Union blocked that merger. Amazon announced that they are abandoning the deal because of the European antitrust or whatever reason they're giving for blocking the merger. Now iRobot is laying off 30% of their staff. People are losing their jobs. And bird flu may be making a comeback. Keep your eye on that one, guys. Remember the $7 eggs from 2023? Remember that story? That was a 2022 story. They're all blurring together here, guys. Well, eggs are still cheap, but we're starting to hear stories about flocks getting culled. This time in California, another farm was just hit with an outbreak of avian flu, and they are having to cull 500,000 birds. It's not yet anything resembling what we saw in 2022. I just want to emphasize that. It's only just getting started, and this is in California, an area that was largely spared from the avian flu outbreak that happened a few years ago. So there's a lot going on in the world today. We got a big week of earnings, big tech earnings, the Federal Reserve. On Tuesday, we got Microsoft and Google reporting. Going to hear a lot about artificial intelligence when those two report on Wednesday, besides the Federal Reserve and the FOMC meeting, which we will be live streaming here as we always do. We've got MasterCard will give us some good data about the health of the American consumer or lack thereof. And we got Boeing is going to report on Wednesday also. We'll find out about that CF of the 737 MAX and what's going on there with the recalls. Thursday, we got Apple and Amazon, two massive market caps there. And then on Friday, we got the oil majors, ExxonMobil and Chevron. It's going to be a busy week, guys. Grab your wake-up juice. Let's shrink my big melon of a head and see what's going on in markets this morning. And don't forget that like button, guys. And if you're new to the channel, hit that subscribe button and have your coffee with the melon heads every morning. Right now, stocks, look at that. The S&P is eking out a positive pre-market this morning, just 0.2 points higher, 0.00%, but in the green nonetheless. Stocks are up. Isn't that nice? We've got the outbreak of war in the Middle East, or the pending outbreak of war in the Middle East. We've got China real estate market collapsing, stocks go up. Yep, that's about par for the course. The Dow, meanwhile, is up 12 points. Down 12 points, or 0.03%. ahead of the opening bell, and the NASDAQ is 20 points into positive territory, or about 0.12% higher. Meanwhile, we've got a slightly stronger dollar this morning, 103.64 on the Dixie, or the U.S. dollar index measured against other global currencies. That's up 21 basis points this morning. And interest rates are a little bit of a mixed bag. We've got lower rates on the long end of the curve, higher rates on the short end. The 30-year is yielding 4.337. That's up 5 basis points this morning. The 10-year, 4.101. That's up almost 6 basis points. The 2-year, meanwhile, is up 3 points at 4.335. And the 1 month yielding 5.382, where it's been for the better part of about 8 months now. Looking over at the commodities board, though, gold and silver are having a good morning here. April gold futures at $2,054. That's up $18.50 this morning, almost 1% higher for gold. March silver futures at $23.15. They've retaken that 23 handle. That's up 28.5 cents this morning, about 1.25% higher for silver. Platinum and palladium both up 1% and change this morning. Now, crude oil, this one is interesting here. March West Texas Intermediate crude oil futures trading at $77.44. It's actually down 56 cents, or about 0.72%. Let's talk about oil here, guys, because Iranian allies brace for U.S. response to deadly drone strike. The attack in Jordan by Iranian-backed militants killed 3 U.S. service members. I would add, guys, that the Iranians are not claiming responsibility for the attack, actually denying it. Just want to throw that out there. Tensions in the Middle East entered a new combustible stage after a drone attack by Iranian-backed militants killed 3 American service members, pushing Washington to consider its response in a broader conflict that has now turned deadly for the U.S. The attack on a U.S. outpost in Jordan near the Syria border was carried out by Iranian-backed militants in Syria and Iraq, President Biden said on Sunday, and signaled an escalation in hostilities that have been growing since the October 7th Hamas attack on Israel and the ensuing war in Gaza. Biden said the U.S. would respond. The Biden administration has to weigh a response forceful enough to deter Iranian allies from conducting further attacks on U.S. forces and interests while avoiding getting bogged down in another war in the Middle East. So the war drums are beaten once again. 3 U.S. service members killed over the weekend. Unfortunately, it's a very sad story. Now we just wonder what comes next. There's going to be a retaliation. We don't know how big, how targeted. Will they hit mainland Iran, or will they target the proxies or the IRGC? We still don't know. Only time will tell. But the world marches slowly into war once again. Now, oil prices, however, this is kind of interesting here. Oil initially yesterday, we had a big move higher. Let's zoom in a little bit on this candle here. You can see oil prices moved higher. We went as high as 79.33 overnight and then started to sell off. And now here we are in the negative territory, down 78 cents. So oil markets, at least right now, are saying the U.S. response is probably going to be something a little more measured or tepid. It won't be an outright escalation. So we'll see if the oil market is making the right call or not. Oil has broken out of this downward channel that we were in pretty much from September until the beginning of January. We broke out of that level, bounced around and retested a few times, and now we seem to be heading up again. See what happens in oil. Now, here's the big one. Evergrande set for liquidation as China property crisis drags on. Finally getting some kind of closure here. The developer will end up in new management, the judge says in the order. Trading in the stock was halted after a 21% tumble on Monday. I would add, guys, a 21% tumble on Monday. That is after the stock has already fallen 99% from where it was a few years ago. Stocks can fall 20% a day forever and never get to zero. I just want to mention that one. China Evergrande Group received a liquidation order from a Hong Kong court, setting off a daunting process to carve up the biggest casualty of a property crisis that's upending the world's second largest economy. The ruling on Monday from Hong Kong Judge Linda Chan is the latest twist in a saga that saw Evergrande amass more than $300 billion of liabilities during China's debt-fueled property boom before turning into the poster child of a market bust that shows few signs of ending. The builder was valued at just $275 million on Monday before trading in its shares was halted, down more than 99% from its peak. Evergrande's collapse is by far the largest in a crisis that's dragged down China's economic growth and led to a record spate of defaults by developers. The liquidation will be a test case of the legal reach of Hong Kong courts in China, where most of Evergrande's assets reside. Any new management will also need to navigate asset sales in an industry lacking liquidity and confidence. So those last two sentences there, guys, that really sums up what's going on here, what this liquidation petition means. And it's why I've got that big "now what" in the title, because the liquidation will be a test of the legal reach of Hong Kong courts in China, where most of Evergrande's assets reside. If the CCP decides to just ignore what the Hong Kong court says, and there's really nothing forcing them to listen to the Hong Kong courts because the CCP does whatever they want, well, most of Evergrande's assets are in China, and if they just refuse to sell, then that liquidation order isn't worth the paper it's printed on. There are some assets that Evergrande holds overseas, and I guess those offshore bondholders can go after those assets, and whatever those are going to be worth, not very much. So that's one thing. And then the last sentence there, any new management will also need to navigate asset sales in an industry lacking liquidity and confidence. What they're saying there is those assets that Evergrande holds, they're not going to be worth anything. They're near worthless assets. There's no liquidity. Nobody is buying empty buildings that have shoddy construction, concrete with no rebar in them. Nobody lives in them. They're just shells of a building. Nobody wants to buy this garbage. There's no cash available to do it. There's no confidence in the market. China's investors are no longer pouring family money into real estate like they were a few years ago. So that's the real question here is now what? Do they try to sell? And if they do sell, forget it. It's just going to absolutely tank the Chinese property market because, again, it's illiquid. If we get any kind of price discovery, whatever the price of these assets is, it's going to be a whole hell of a lot lower than all of these developers are carrying them on their balance sheets for. There's just this big pretending going on in China that all these buildings are so valuable and, oh, yeah, we're going to build even more of them. We're going to make everybody whole. It cannot possibly be done. It's just a matter of who's going to get screwed and how bad. And right now, extend and pretend seems to be the law of the land. But you would never know based on what we see in the Chinese stock market. Taking a look, these are one-day candles in the Hang Seng. This is Hong Kong Stock Index. Stocks are up in Hong Kong today. 125 points, or about 0.78% higher for the Hang Seng. Check this out, guys. Look at this big buying last week. That was the Chinese stimulus and all the policy support, and the national team was going to be buying stocks, and they banned short selling. And then we're coming back down. We had one little sell-off on Friday. Now we actually got another green candle here. Another green candle after Evergrande is ordered to liquidate. So that just goes to show you there that the market doesn't really think this is going to be a big event. People are still buying stocks in Hong Kong. Now, the the Shanghai Stock Exchange, or the SSE Composite, that one doesn't look quite as good. Again, we had big buying last week, all these green candles up. We do have a little bit of a red candle this morning. The SSE was down 0.92%, about 26.8 points there. So the Shanghai Composite's selling off a little bit, but people are buying in Hong Kong. So what's going on here? Well, let's take a look at this one. Hedge fund flows, hedge funds lap up China stocks at the fastest pace in 5 years, according to Goldman. Last week, as everybody was talking about the crash in the Chinese stock market and the Chinese government was rolling out all of these, what a lot of people have been saying were weak-handed policy support measures, U.S. hedge funds were buying up Chinese stocks like gangbusters, and they were doing it, I guess, to front run what they anticipate to be a bazooka of liquidity from the Chinese government. They're basically betting on some kind of a 2020/2008 style bailout for the Chinese stock market. And so they're piling in ahead of that. But the Chinese government may not necessarily do that. And I would add that, this is U.S. money is piling in here as the Chinese government is ignoring an order to pay overseas investors when all these companies go belly up because of Evergrande. Something you might want to keep an eye on here. Hedge funds snapped up battered Chinese stocks over 3 days last week at the fastest pace in more than 5 years, Goldman Sachs wrote in a note to clients. The cumulative net buying of Chinese equities for January 23rd to 25th marked the biggest 3-day shopping spree in more than 5 years, Goldman wrote in a note published Friday and seen by Reuters on Monday. This surge in hedge fund interest in Chinese stocks coincided with Beijing stepping up efforts to restore confidence in the world's second biggest economy, which has been hit by a crisis in the property sector and weak growth. So the dates they're giving us there, the 23rd through the 25th, let's look again at the Hang Seng here. And here is the 23rd, 24th, and 25th. So these three massive green candles here, guys. You see that there? That is U.S. hedge funds buying up stocks in China, speculating that the Chinese government is going to bail out the Chinese stock market. It's not Chinese hedge funds buying it up. It's U.S. hedge funds that were doing it. That's interesting. Good luck with that one, U.S. hedge funds. And congratulations to Bloomberg on being behind this channel by a mere 14 months. You guys are well ahead of your other peers in the mainstream financial press with this article from just a few days ago. Economists may be using bad data to make big decisions. So finally, we've got the Keynesians in the mainstream financial press are starting to question the validity of the economic data coming out of the Federal Reserve and the Bureau of Labor Statistics and the Census Bureau. Somebody pinch me. Am I dreaming here? Bloomberg actually questioning the data. Congratulations, guys. You're only a year behind. COVID-19 and general mistrust among members of the public, self included, could be skewing U.S. government employment surveys. Last year, a U.S. Federal Reserve kept raising interest rates to rein in inflation. Chair Jerome Powell kept pointing to one category of data that was guiding his decision-making, the labor market. But it's possible the Fed's labor market data of choice may have been faulty. That could be in part due to COVID-19. Job openings might get counted twice since remote work has driven some companies to advertise the same position in different parts of the country. Another reason may be that some Americans no longer trust the government. You think maybe somebody doesn't trust the government? I mean, we're just getting crazy now. Out comes the tinfoil hat. Say it ain't so that people are mistrusting of the government. I can't imagine why. Another reason maybe some Americans no longer trust the government and the government needs their trust to get them to respond to surveys. We have seen that survey responses have been very, very low over the last couple of months. They can only do as good a job as the data they have, says Claudia Sahm, who blocked me on Twitter for questioning her ridiculous hard stop statement about Americans having it better than they did a few years ago. She's a former Fed economist who now runs a consulting firm and blocks people who question her on Twitter. She sat down with the Big Take DC podcast to talk about why the central bank's preferred labor market measure, the Job Openings and Labor Turnover Survey, might not be giving the best picture of the economy. Companies are behaving differently, said Bloomberg's Tracy Alloway, co-host of the Odd Lots podcast. People are so scared from the pandemic period that they just want to make sure they're not caught out again with the labor shortage. So this is interesting because you've got Claudia Sahm going on the Odd Lots podcast, and me and my big mouth apparently. Claudia Sahm blocked me on X for her comment about how the vast majority of Americans are better off financially than they were a few years ago, which is a ridiculous and factually illiterate statement to make. And when I questioned her on that, she blocked me on X. Sorry, Elon, I keep calling it Twitter. I know you're trying to rebrand. So Claudia Sahm blocked me on X, and then she's going on the Odd Lots podcast, which is run by Tracy Alloway, who I have no problem with. Tracy seems pretty sharp. But the co-host Joe Wiesenthal on the Odd Lots podcast, he blocked me on X a few months ago because he was talking about the stupid mint the coin, the idea of the $1 trillion platinum coin to fix all the government spending problems. And when I questioned him that, he blocked me. So we've got this big, massive mainstream podcast run by a guy who blocks me, brings on a Fed lady who blocks me to talk about a subject that I was covering on this channel 14 freaking months ago. All right. Congratulations to Odd Lots for blocking me and for being only a year behind me. You guys are doing great over there. No, really, sincerely, I wish you guys really luck. And again, Tracy Alloway seems pretty nice. I have no problem with her. Well, I'll probably get blocked just by order. Let's move on, shall we? Check this one out. Amazon terminates iRobot deal, the vacuum maker to lay off 31% of staff. This one's just hitting the tape this morning. Amazon said on Monday it would not move forward with a planned acquisition of vacuum maker iRobot, with the two companies saying in a release there was no path to regulatory approval for the deal. The vacuum maker also announced it would lay off 31% of its employees. That's around 350 people. And that its chair and CEO Colin Angle would step down effective immediately. iRobot shares plunged 15% on the news. Here is iRobot stock. It's now down 19% ahead of the opening bell this morning. Merger's not going through, laying off 35% of the staff, and the CEO is stepping down. Horrible day for iRobot shareholders, guys. There's a lot going on here. This company may not survive. They may end up getting bought out for a whole heck of a lot less than Amazon was going to buy them out for. So special shout out to the European regulators for causing 35%, about 350 people, to lose their jobs over at iRobot. And let's talk about this one. Also, avian flu is devastating farms in California's egg basket as outbreaks roil the poultry industry. Last month, Mike Weber got the news every poultry farmer fears his chickens tested positive for avian flu. Following government rules, Weber's company, Sunrise Farms, had to slaughter its entire flock of egg-laying hens, some 550,000 birds, to prevent the disease from infecting other farms in Sonoma County, north of San Francisco. It's a trauma. We're all going through the grief as a result of it, said Weber, standing in an empty hen house. Petaluma is, I don't know if I'm pronouncing that right, Petaluma is known as the egg basket of the world. It's devastating to see the egg basket go up in flames. A year after the bird flu led to record egg prices and widespread shortages, the disease known as highly pathogenic avian influenza is wreaking havoc in California, which escaped the earlier wave of outbreaks that devastated poultry farms in the Midwest. Now, guys, I would add that California is particularly susceptible to this outbreak. California has very strict laws on how chickens and farms are supposed to be treated. There's no cages are allowed in the state. You have a lot more free-range farms. And I am personally in favor of free-range farming if a farmer chooses to raise their hens in a more humane way like that, because the birds get a better quality of life. That is, the ones that don't get killed by hawks and foxes that just peck at the flock constantly. but it also makes them more prone to outbreaks of bird flu because they interact with wild birds who sneeze and poop, and then the chickens walk around and peck around in the same ground, and the disease spreads. So I'm not surprised to see this in California. I also want to keep the doom in check a little bit here, guys. This is not another story about $10 eggs, at least not yet. This is just a flare-up. We're into the migration period for birds. Geese and ducks from Canada are moving south through California, heading south for the winter, and they are carrying the disease with them and dropping it along the way. So this is kind of an expected thing to happen. Just mentioning this to stay on top of the story in case this does spiral into another big bird flu outbreak nationally that drives up egg prices. And last one of the day, Biden urged to reverse LNG pause by global business groups. The Energy Department on Friday halted approval of new LNG export plants. The U.S. will study the effect of exports on climate change and the economy. Business organizations from the U.S., Europe, and Japan called on the Biden administration to reverse a decision to freeze approvals of new licenses for liquefied natural gas export facilities. With numerous forecasts projecting global natural gas demand to rise well into the next decade, additional supplies of LNG will be needed to supply world markets. U.S. Chamber of Commerce, Business Europe, and Japan's Kidan Rin said in a joint letter to President Joe Biden, "We know this demand can be met in a manner that continues progress on emissions reduction." The U.S. Energy Department said Friday it had halted approvals while it scrutinizes how LNG exports affect climate change, the economy, and national security. Biden has faced pressure from environmentalists concerned that the build-out of LNG export plants ensures the fossil fuel will be burned for generations to come. This chart here shows LNG exports going back to 2017. The black line is the United States. The orange line is Australia, and the yellow line is Qatar. And this is in hundreds of millions of tons. And you can see U.S. LNG exports have risen sharply over the last few years as LNG terminals have come online. The U.S. is now the largest exporter of LNG. This is why the United States is now a net exporter of energy, because we export more liquefied natural gas than we import in crude oil. It's been a monumental shift in the flow of money from into and out of this country. And it's been in spite of these, as I say, the pink hair committee chair, the imbeciles with daddy issues who like to freaking vandalize the Mona Lisa with chicken soup in order to make their stupid statements about climate change. Those are the people who are in charge of energy policy in the whole freaking world. And, well, we've got an ocean of natural gas in this country. We've got all the energy in the world. It's just in the wrong place. Liquefied natural gas is the easiest way to move it to where it is more needed. Very profitable for the Americans, I might add. And, we can't have that because the people who deface the Mona Lisa, they're the ones who actually dictate energy policy. If every one of the already licensed projects moves forward and actually gets built, U.S. LNG exports will almost double. The Department of Energy decision likely won't result in any significant tightening of global gas markets, as these plants will take years to come online, as affected projects wouldn't come online until at least 2027, Goldman Sachs said in a note. Guys, I would also add that these facilities, it was the export license that was withheld from them. These facilities have already been through national security reviews. They've already been through environmental reviews. They've already been permitted to be built. It's the export license now that they're being withheld. Why? Because it's an election year and the leftist base is not energized by this geriatric Roomba that can't even put a sentence together, articulate his words. And so what are we going to do? We're going to sabotage multi-billion-dollar energy projects that Europe desperately needs, I might add, in order to placate the base in an election year. And maybe I'll just get off my political soapbox now. How about that? And I just want to say thank you very much to, wow, look at all you guys. Steve Woitis, thank you, sir. He says 50,000 subs. Congratulations. Yes, sir. Thank you very much. Shout out to my buddy Todd Sachs from Sachs Realty and my buddy Travis and Melody. Had that fantastic road trip last weekend down to Maryland at Sachs Realty's new office. It was fantastic. Just a great trip. Did a couple of interviews on those channels. And welcome to all the new subscribers to the channel, by the way. Thank you, everybody, to the 50,000 people who still listen to me run my big yapper every morning. I really appreciate that, guys. And thank you, Steve, for the congratulations and the well wishes, sir. I appreciate that. Oh, look at that. Even Mish, my very own moderator, Mish. Thank you, Mish. I appreciate that very much. He says, congrats on 50 subs. Keep it rolling. And thank you, Mish, and the other moderators for everything you guys have done to help make the channel what it is. I really appreciate that very much. And speaking of the other moderators, M&J is getting in on it as well. Thank you, M&J. Says, thank you, Melonheads, for 50,000 plus subs. That is a lot of Melonheads. We're almost, well, yeah, we're filling a stadium. Melonheads could fill a stadium now. How great is that? Thank you very much, M&J, for everything you do for the channel and support of the channel. And even my buddy Travis is here. Congratulations on 50,000. You earned it. Thank you, Travis. A lot of them came over from Real Estate Mindset. And by the way, check out that video I did with Travis yesterday. Travis, read the comments on that video, the interview that we did at Todd's office. Really, really fantastic comments. A lot of people heard your message. A lot of people are learning from your experience during the GFC. That was a really good interview. I got a lot of really good feedback about that. And share that one, guys, especially if you know somebody who's engaging in this self-sabotaging practice of doom spending. Travis was nice enough to share his personal story from the global financial crisis. It was a pretty powerful interview, I thought. Really good stuff, brother. And thank you, sir, for supporting the channel and for the well wishes on 50,000 subs. Nashville Pasta Man is in the house, says, I heard PRC made it illegal to sell a property for less than you purchased it for. Well, wow, we're all going to be rich. Why don't we pass a law like that too, Nashville Pasta Man? Let's make it a law that says it's illegal to lose money and we'll all be millionaires. You see, this is exactly the kind of outside-the-box economic thinking that could really lead to a big economic expansion and widespread prosperity for all. No one's allowed to lose money on investments. I'm going to go down in history as the guy who fixed the stock market forever with the swipe of a pen. If only it was that simple. Thank you very much, Nashville. And I agree. It's ludicrous. They can look, we do stuff like this here too, right? The bank term funding program was all about banks aren't allowed to lose money. The bailouts when they were supposed to be bail-ins, the whole thing that happened with Silicon Valley Bank in March. Banks aren't allowed to lose money. The rich aren't allowed to lose money, right? The reason Steve Schwartzman can just walk away from his tens of millions of dollars in debt on office buildings, leaving middle-class retirement investors holding the bag, is because the big guys aren't allowed to lose money. We do the same stupid laws here in the States. We're just a little sleazier about it. We're not as openly defiant. But it happens everywhere. The strong prey on the weak. It's a human trait. It's a biological trait. It's natural. We see it in nature, and we think we're so highly evolved. We're really not. We're at the end of the day, we are susceptible to those same impulses that wild animals are. We just tell ourselves we're better than that. Thank you very much, Nashville Pasta Man, sir. I appreciate the super chat, the support of the channel, and getting younger every day. I've got that same problem. He says, your channel is still a must listen for me. Great job, Jack. Well, thank you very much, sir. I appreciate the kind words and the support of the channel very much. Thank you. Getting younger every day. Congratulations on your increasing levels of youth. And Charles Coughlin says, here's hoping the next 50,000 subscribers are all as smart and good looking as the first 50,000. I would also add, I hope they're also as smart and good looking and humble as the host of this channel. And thank you very much, Charles. Congrats, Jack. Thank you, Charles, very much. I appreciate that. Shout out again to all you guys who've been here since the beginning in this trip. It has been one heck of a trip. And Art Powell says, does Evergrande have any assets in the U.S.? I do not believe they do. I don't know that for a fact, Art, because they may, through several of their subsidiaries, or they may own stakes in companies that have projects here. I remember I did a video not too long ago about a building in San Francisco, a building that was sinking, I might add, that an outfit called the Ocean Group. It was like the China Ocean, I think was the name of the developer. It was a subsidiary of a Chinese developer who went bankrupt. It was not Evergrande, but it was a subsidiary of a bankrupt Chinese developer. And that building was seized by the lender here in the States. That was like, going on a year and a half ago now, which is why I can't remember it. So I don't know for a fact that Evergrande doesn't have any assets in the U.S. They may, through subsidiaries, own pieces of an asset, but you're talking pennies on the dollar, nowhere near enough to make those offshore bondholders whole. So they're going to be pecking at the bones of whatever assets Evergrande has left overseas, but it won't be enough to pay off those bonds, that's for sure. Thank you very much, Art Powell. That was an excellent question, by the way, sir. And thank you, everybody, for the well wishes, for the super chats, for the support of the channel. Thank you to all 50,000 of you melon heads out there. You guys are awesome. I really appreciate it. every single one. Patreon supporters for everything you guys do for the channel. Links down below to all that awesome stuff. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.